want to welcome Dmitry Zaytsev to the program today. Dmitry, welcome.
Happy to be here.
Okay, I guess we're going to start out with talking about, or trying to get your feelings about the macro environment for stocks in general, and also the cannabis market. Obviously, we've had a lot of capitulation lately. How do you see this playing out into the Q1 of 2019?
Yeah, so I think the market generally has been marked by lower lows, supports breaking, and generally a really pessimistic environment. And this is, we've chatted before with James and others on this program, but it's really important to have a trading plan and have a lot of cash going into these kind of scenarios, because look, there's opportunities left and right, not just in the cannabis market, but globally speaking. And so generally what you've seen is a lot of fear, a lot of liquidity being pulled out from the market, and the Fed not really being as cooperative as some people fear. I think this is providing and will provide a buying opportunity, and I think it's time to start looking at names you're interested in and start thinking about some long-term positions.
Okay. So I know in our writings and my appearances on the show, I've been really stressing that easing into positions in the cannabis space, for example, or growth stocks in general, is what you want to do. It doesn't appear that we're in a market environment that's going to be very forgiving for bad entry points. Mm-hmm. Now, would you agree with that? And also the over-leveraging aspect. Retail investors tend to over-leverage. Now, would you agree that easing into positions, getting good entry points, and not over-leveraging on, if you're investing in growth stocks, is the key to 2019, surviving whatever may come?
I think it's a psychology thing. So like you said, a lot of retail investors and their studies on this, they go all in on the weed stocks or on high growth, Shopify, whatever, FANGs. And generally they say to themselves when things are going up, I'm in it for the long term. The reality is when you're putting 100% of your money into something and it goes down 50% or more, you start panicking, and especially if you didn't do your due diligence and you really weren't there for the long term, you don't really know what you're holding, why you're holding it. So I think generally speaking what you're saying, slowly easing into long-term positions, absolutely. If you're the way you should be doing it is honestly just setting a bunch of orders and good till cancel orders and just forgetting about it if you're really in it for the long term. And if they hit, they hit. You check every once in so often and you get on with your life. Otherwise, I would say if you're trading it, you have to have a trading plan. And like an example today, like we just chatted about earlier, I thought maybe Canopy bottomed out. Looks like it was at the bottom of the range. I bought some. It went up. I'm like, oh, looks like I'm right. Rolled over, it broke the support, I covered. So I have a lot of cash. There's lots of opportunities out there. I'm not just going to throw myself into this market until I see some green shoots.
So that's a good point. So it seems that in your mind anyway, it's a psychology aspect. You know what your point is. You did a little bottom fishing. You knew what that point was. It broke it, and instead of doubling down or perhaps purchasing more and putting more money into what could be a poor short-term move, you just eliminated that mistake right now. So as a trader, thinking more short-term, is it one of the keys, would you say, is to exit positions as soon as it goes against your base down level or your final
Well, it just depends, right? Everybody has a different approach, but generally speaking, if you don't have a plan to what you're doing, you're just flying by the seat of your pants, and you have to accept all of the pain that comes with that, right? So when you have a plan, you know exactly what you're doing, and you're just going to say, yeah, I'm willing to make this, at some point Canopy is going to rally. And will it rally to $76? I don't think so, not in the short term, maybe later on. But the cannabis space is prone to 10, 20% rallies over a couple of days, weeks, whatever. And so you say, hey, I'm willing to put my feet in and see if this goes. And if it does, my upside is huge. But my downside, okay, like I'm down 1% on the position, I'm going to cut it.
Right.
So it's just managing the risk.
Now I know a lot of our viewers know that you specialize in options trading, and with prices so low right now in weed stocks, or descending close to 40 or over 40% in the last 3 months. Are you writing puts now? Are you thinking about writing puts because the downside might be a little bit lower right now, now that we've had this outsized move?
Yeah, so what I've been doing is just generally speaking, I was writing puts even before this, and on various names, a little bit on Afria, but mostly on Canopy, though that was my go-to. And when the Afria short report occurred, I covered all of my non-Afria puts, and then I managed that position differently because I was just trading around it. And so I covered a lot of those puts. Now, like you said, things have started to come in. So I have really just started writing some puts, not too aggressively. I think.
So you're kicking the tires at this point.
I'm kicking
but
the tires.
Not all in.
Absolutely not all in. I'm kicking the tires. I think the implied volatility could be a little higher. It doesn't seem like the pricing has gone up as much as I would like it to, but yeah, if I can, for example, the puts that I'm writing are typically two-ish months out, and if I can get Canopy sub $30 for a long-term position and get paid for it, I'll do that. Generally speaking, in terms of going long on call options potentially, right now that could be a losing proposition because you don't know how long this sort of situation, downtrend is going to go. I would say watch to see the S&P and global markets really stabilize and volatility to come down, and maybe some sideways action a little bit. And at that point, I would start scouting out some positions I might want to get into, maybe leading into summer. But you also have to consider catalysts and risks that are going to be coming up in 2019 and sort of positioning yourselves around that.
Accordingly, yeah. The macro picture looks a little dicey right now. I know everybody, I think everybody agrees that growth is going to slow down in the U.S. economy and the world economy. It's just a matter of whether there's going to be a recession, how bad that would be in 2019. Now, looking forward to the first quarter of 2019, what do you see, if you pull out your crystal ball, what do you see for the market next quarter, beginning January to through March, and what do you see for weed stocks in particular?
Yeah, so just generally speaking, I mean, the global economy has actually been slowing for a long time now, probably 6 months or so. And generally speaking, the U.S. Will slow as well, I think. But you've had commodity prices come in really aggressively. It's like crude, copper, like a lot of these base metals. And that's actually somewhat of a stimulus for a lot of these economies. So I'm not as bearish on the economic picture, just generally speaking. I'm not extremely bearish, Great Recession, Great Depression type bearish, but this is more of a story about valuations. So you could have the economy still grow at 1 or 2%, and stocks can still fall 30, 40%, no problem, without a serious recession. And that's just because valuations got really stretched. And cannabis stocks, generally speaking, are the perfect example of this.
Tip of the spear.
Tip of the spear, yeah. You're investing in one of the highest risk asset classes out there at this point. And it's like a tech stock, similar to that, where a lot of the revenues are far in the future. A lot of the opportunities 2, 3, 5 years, 10 years in the future. And the issue with that is, as cost of capital and risk tolerance goes up, right, or risk tolerance goes down, right, people are risk averse, more risk averse. They're not going to want to be in a lot of these names.
Now that being said, let me stop you there for a second.
Sorry, quarter one, quarter two, you were asking about that. So I think we have some kind of stabilization. I think it all kind of will depend on what the Fed does, and if they do back off the rate hike path, and the dollar weakens, the U.S. dollar index weakens, and generally if there's a trade deal and some stimulus that's done by China and maybe others, I think you stabilize from here potentially. And what does that mean for the cannabis stocks? I think the story is you're going to start seeing quality. So the quality is going to start moving. So for example, I think Canopy is probably the tip of that spear, to use your expression, in terms of quality outperforming the rest of the bench.
Right.
And so I think you've seen that even now. A lot of the stocks that have much more questionable business models and standings have been really falling apart because people realize if we're going, if this hype is dead, I want to have my money.
Okay. It's funny, now that you say that, let me ask you this. Do you think there's a perception that analyst projections, revenue projections, profitability projections through 2019, full year 2020, do you think there's some investor credibility issues with that? Because we've seen some of the analysts downgrade.
Yeah, so I've actually, we've spoken, I think, with James on this actually on the last program. I don't know if you watched that, but I took a look actually on analyst projections for revenues for 2019, 2020, and I think they're out to lunch, to be honest. I think their 2019, at least, is extremely aggressive, considering some of the initial numbers we've seen from OCS and this and that. It's probably like twice as, like 2x.
2x?
I think the analyst projections are 2x higher than, at least, in my opinion, than what some of these guys are going to report. And I'm talking as an aggregate. So all I did was I took the top 8 producers by market cap, and I just looked at the consensus calendar 2019, because they all have different reporting periods, right? Revenues. And I said, okay, well, how realistic is this given the pace of OCS sales and some other anecdotal information we have from the other provinces? And it's not very.
It didn't quite measure up to expectations.
No, absolutely.
Okay, so the hockey stick's a little shorter than some other analysts out there. Okay.
Yeah, just generally speaking, and I mean, I think something I'm going to do in the next couple of weeks is compare what the consensus estimate is for revenues and say how realistic is this, and if it is, maybe it's a good play, because maybe some of these companies will meet that or exceed that.
Right.
But if someone exceeds it, it's market share being taken from someone else, right?
Okay, perfect. So let's end it off with your final Q1 2019 prediction for wheat stocks. Are we going up? Are we going down? Are we going sideways? I know it's a loaded question. 3 months is a long time in this market, but where do you see things going in the first quarter, looking at the March 31st?
Yeah, so just big picture, I think equity markets, there might be a little bit more downside, but I think we're through most of this move, or maybe more than half, definitely, for sure. And then as those stabilize, and as some of these valuations come in maybe a little bit further, we're talking Canopy in the low 30s or around 30. I would think that's a really, really attractive long-term entry point, given their cash balance and given the passing of the Farm Bill recently. I think the next kind of set of catalysts will be some of these Canadian, well-capitalized Canadian names potentially expanding and driving growth in the U.S., and also establishing infrastructure and distribution channels in the U.S. just based on the hemp business line. And they can piggyback off of that in the next couple of years as it gets decriminalized, prohibited.
It's a tough word.
Yeah, sorry. And so I think those are the sort of the positive catalysts, and maybe some revenue numbers, stores, rollout in terms of that. But obviously a lot of these companies are going to miss, as we talked about, their revenue. So I think there's a lot of negative catalysts. And I'd also ask the question, if we can't rally on the news we've had in the last 2 weeks with Novartis, with Tilray, InBev,
South Korea, Luxembourg, you name it. There's been over a dozen. Yeah, there's been a lot.
Yeah, there's a lot of deals that have happened recently, and Farm Bill, and we're just selling at the open. So if we can't rally in a good news cycle, when are we going to rally?
Yeah.
Right? And what's going to happen when there's actually another Afria type short report, or there's some kind of other negative catalyst?
Yeah, definitely. Yeah, it's definitely been tough in that regard, and that's been one of our tells as well. The lack of catalysts really moving the market that would have sent the sector up double digits previously is not working at the present time. So, okay, Dmitry, we're going to leave it there. Thank you for joining the program. It's good to see you as always.